Problem number 8. From the following trial balance, prepare balance sheet of Star Limited for the year ending 31st March 2018 as per Schedule 3 of Companies Act of 2013. In this problem, the speciality is you are not having just list of various items, you also have a trial balance. Previous one was just information, one column, but here you have two columns. One is debit balance, other one is credit balance. So you might have learned this preparation of trial balance in the first PUC. If you don't remember, I will be telling you some hints. You can make a note in your book. Debit means here either assets, okay, or expenses. Debit is assets and expenses. Credit means liabilities and incomes. So that is the one. You have to remember this, or you can apply the rules of accounting. So for example, if you remember real account rules, debit what comes in, credit what goes out. So debit is what comes in asset, credit is what goes out like liability. Nominal account rules, debit all expenses and losses, credit all incomes and gains. So if you remember that journal entry preparation, you will remember which account comes to debit, which account comes to credit. So let us have a look into this. And we have a mix of balance sheet items as well as income statement items, which we have done earlier. So balance sheet items comes to the balance sheet. Meanwhile, the income statement items to be prepared and checked whether it is okay or not. If any income is there, that we have to take it as a surplus in the balance sheet. So let us try to work it out now. Have a look at it now. So equity share capital, liability balance sheet, preference share capital, liability balance sheet, reserves and surplus, liability balance sheet, sales income statement. You can make a marking for that as I or something if you have a hard copy. Other non-current liabilities, very clear non-current liability. So you can see all items which are on the credit side. So most of it are all liabilities. Only sales is the one which is an income. So all are liabilities. Now we are coming to the debit balance. Debit balance will be either an asset or an expense. So let us see which are all assets, which are all expenses. So tangible asset, 4 lakhs, intangible assets, 2,50,000, both are fixed assets. Next, salaries is an expense, printing and stationery is an expense, rent, 80,000 debit is an expense. Remember, rent, if the amount is on credit side, it is a rent received. If amount is on the debit side, rent paid. So 80,000 is rent paid. It is an expenses. Next, purchase of goods, amount paid, so expenses. So from salaries to purchases, all items are income statement items. Trade receivable is an asset, current asset. It comes in balance sheet. So this is the problem given. We have few items of income statement. One is sales, other one is from salary to purchase. So 5 items belongs to income statement. So they have not told income statement to be prepared, but when you have income statement items, especially like sales connected and other items of expense, we need to find whether there is an income or loss for the business. So let us see how to go for working. If you have any doubt, you can definitely ask me meanwhile. So this is question number.
Sir,
Huh.
so the rent one, what you told, can you repeat?
Yeah, I will. Rent, see the amount on which side? Debit or credit?
Debit.
Debit. Debit means rent paid is an expense. If amount 80,000, suppose, if it is in the credit side, that becomes rent received. Because some of the items, amounts, it may be receivable or payable, like interest, dividend, rent, commission. We have to be more careful because business can either way receive or pay these items. So we have to be careful, especially when we have debit and credit columns, that is a trial balance. Hope it is clear for you now.
Yes, sir.
That's why I given a hint for you. Debit means what? Credit means what? So I have here balance sheet. I have some note, and I also have an income statement over ready. So when you have income statement, you have to be ready with this also. So that is what is very much required. So please remember this, very, very important for you, because in the exam it looks quite easier, but then also you have to be more careful whether we have to prepare or not. So you'll understand over here. Okay. Now we'll move on.
So is it compulsory to prepare this statement?
When you have an item connected to income statement, 5 items are there. If you don't prepare, no guarantee that either income is there or not. So we'll see how it takes place now, how we go ahead. Please have a look. Still you have a doubt, definitely you can ask me. Okay.
Okay, sir.
Let me start from the first item, equity share capital 2 lakhs. Second item, preference share capital 3 lakhs. Both these belongs to share capital. So I will take a note because we have 2 items over here. So I will take a separate note for this. Equity capital 2 lakhs. Preference share capital 3 lakhs. So let me take the total later on. Let me go on entering the information. Reserves and surplus 3 lakhs is there. So I can enter also because only one amount is there. I can enter here in the balance sheet 3 lakhs. Next, sales 5 lakhs is there. So it is connected to sales 5 lakhs is there. It is connected to income statement. So let me take it to income statement here. You can see revenue from operation or sales. So let me take the sales there. 5 lakh rupees. Then other non-current liabilities, fifth item, other non-current liabilities, 2 lakhs is there. So non-current is long-term, remember. So we'll go to balance sheet again. See, other non-current liabilities, you can see there that amounts to 2 lakhs. So let me write that one over here. Under non-current liabilities, there are 2. One is long-term borrowing, other one is other non-current liabilities. So I have taken that amount over here. Next, tangible assets 4 lakhs, intangible assets 2,50,000. So only one amount. So I can get into the asset side over here. Under fixed assets, we have two items, tangible assets and intangible assets. So let me go there. Tangible assets 4 lakhs. So intangible assets 2,50,000. So in the previous problem, we had fixed assets one amount. Here you have tangible assets separate, intangible assets separate. Next, salaries expense, printing and stationery is an expense, rent paid is an expense, purchase is an expense. So let me go one by one. All comes in income statement. Item number 8 to 11. I'll go one by one. Salary 90,000. Salary belongs to employees welfare expense. So I will take that. I have written in the bracket salaries for your reference. I have written there 90,000. Next, printing and stationery 30,000. Rent paid 80,000. So I'll go for other expenses. Note number 2. Printing and stationery 30,000. Rent paid 80,000. So you can see here, printing and stationery 30,000, rent paid 80,000. Both are other expenses. We don't have any heading for this in the expenses. You can see there is no heading. So I'm taking that under the last part, other expenses. So I have prepared one note here for printing and stationery and rent paid under other expenses I have taken. So note number 2. Next, purchases 3 lakhs. Purchases we can straight away take in the here income statement. Purchase of goods 3 lakhs, only one amount. Next, trade receivable 3,50,000. Trade receivable means, remember, asset. So trade receivable here 3,50,000. So now we have taken all the items over here. Nothing to see in the problem. Only we have to solve the remaining working. So first let me go for totaling the notes. Note number 1, 2 lakhs and 3 lakhs. We have two items, one equity share capital, the one preference share capital. Then I have other expenses 30,000 and 80,000. So 30 plus 80, 1,10,000. So let me take this 5 lakhs to balance sheet under share capital. Note number 1. Note number 2 connected to other expenses. Let me take over here under income statement. Remember, under income statement, I'm taking then we can go for totaling the income statement. Before going for finalizing the balance sheet, we have to go for income statement. So 5 lakhs no other income. Next, add all these 3 lakhs, 90,000 and
5 lakh.
so 5 lakhs total expenses. So here you find 5 lakhs here, total income, 5 lakhs in the expense. So this becomes nil. Profit before tax is nil. So nothing to carry to the balance sheet. So we need not bother about, there is no income, nothing to bother. Only we have to bother about totaling now this one, balance sheet. So share capital I have taken and other items. Let us add here. So 5 lakhs plus 3 lakhs plus 2 lakhs. Total liability is
10
10
lakh.
lakhs. So now let us see the asset side. There are 3 items, 4 lakhs, 2.5 lakhs, and trade receivable 3 lakh 50,000. So if you add all these 3, 10. Yeah, this is also 10 lakhs. So our balance sheet is having same total of assets, same total for liabilities. So this is how it goes on. So fortunately, we don't have here any income. If this income is there, we have to go for reserves and surplus. We have to add it over here under reserves and surplus. So profit is nothing but surplus.